Max Keiser time now to turn back to Mitch Firestein of PlanetPonzi.com. Mitch, welcome back to the Keiser Report.
Thanks, Max.
All right, we left it off on an interesting note about Mark Carney, the Bank of England chairman. When he was in Canada, he inflated a huge housing bubble. It made him look like he knew what he was doing. They hired him over here by George Osborne to run the Bank of England, but now his legacy is that in Canada, the big housing bubble he blew up is now crashing, right?
Yeah, I mean, look at oil prices have collapsed, the currency's collapsing, and there's not really demand for property there. The same thing is going to happen here. I mean, they've overbuilt property here. I believe, Max, that the property bubble in the UK collapsed. It already started popping and deflating last year, probably in Q3 of last year, and we're still seeing the beginnings of a collapse, which is going to bankrupt the banks, and I don't know how they're going to bail them out. You know, it's going to be a very difficult time.
Well, either they let the bond market collapse or they're going to print money and create hyperinflation. Those are the two outcomes. Now, of course, Mitch Firestein, we can't have you on without some charts. What's this unemployment chart say?
We've got two unemployment charts. The first one's the U3, which is a whale of a lie. Basically, the U3 is a government statistic that doesn't include the participation rate, and the participation rate is key. So in other words, if you get 5 years or whatever it is of unemployment benefits, and you fall off the rolls, you're no longer unemployed, you just don't exist anymore. So you're not part of the statistic. So really, it's nothing but a tool for the propagandists and the government and Bernanke and Yellen to say we've reached full employment. Now, the key is, if we've really had full employment, then why would we need zero interest rate policy or negative interest rate policy? We wouldn't, and we wouldn't need these emergency measures. Now let's look at the second chart from 1977 to 2015. We have the labor participation rate. Look at this. It hasn't been this bad since Jimmy Carter was president. Basically, the unemployment numbers are job to give people an impression that things are better than they are and to talk it up. Most of the employment has come in part-time, temporary, low-pay work, and people, the savers that have been forced to work, who were supposed to be in their golden years and retiring, now have to work at Walmart for minimum wage.
Right, so when people talk about employment or unemployment, they use a very broad statistical measure that always favors what you hear coming out of government offices. If you dig down a little bit and you look at some of these other, the way the statistics are actually captured, instead of the U3, you look at the U6, or
right.
You look at these other different charts, you get a much cleaner look and view into, it's like a microscope with a lot more power. You get a lot more view. So you're looking at things with a much more powerful view.
Right, that's correct.
And you're seeing more of the truth, which is that the labor participation rate, the number of people that are actually in the labor force, it hasn't been this bad since Jimmy Carter. Let's move on to another chart, the NASDAQ. Which is like the Dow Jones Industrial Average, except it's mostly high-tech stocks and smaller cap stocks. The NASDAQ index is where Apple computer trades, et cetera. What do we see here?
Well, if you look at what happened in the NASDAQ, that was the dot-com bubble that exploded with Alan Greenspan being at the helm of the Fed. And at that point in time, Mattel purchased the company for $3.5 billion that they sold a year later for $27 million. You can see that the high on this chart was 5,132. That's when Pets.com, the sock puppet, was on every TV channel. The company never made any money. They lost a fortune. It went down from 5,000 and collapsed for years and years and years. We haven't even gotten back to the level, that 5,000 level, yet to this point in time. Now, that was irrational exuberance. The bubbles that were created back in 2000 and 2001 now are bigger, because back in 2000, the only market that was the biggest bubble on the planet was the NASDAQ. Now you have every global stock market and every global bond market and the property market that are all bubblicious. So when it explodes, it's going to get really, really ugly.
Well, I mean, I would add that in the NASDAQ index is Apple Computer, which is now over $700 billion in size, heading to $1 trillion in size. If you took that one company out, which is almost a third the size of the British GDP, just that one U.S. company, you'd see, I think, a more representational picture of what's happening in the market. But you do have this behemoth, Apple Computer, that is on a tear. It's doing extraordinarily well. At what point competition comes in to eat at their margins, we'll see.
Well, Apple is the only stock that's been holding up, or one of the only stocks. You can see a huge divergence in all of the different indices.
But they're
S&P 500,
they're using easy money from the Fed to buy back their own stock. So that it creates a distorted stock price, and it's not representational of really of what their franchise is worth. I want to move on. Let's talk about gold.
That's the most important chart that you can ever see in your life. This chart that you're seeing right now, gold from 2000 to 2015. Now, I made a bet with some lawyer who represents his biggest client begins with a G, the first word, second begins with an S.
Okay.
100 pounds that gold outperformed the NASDAQ. Gold from 2000 to 2015, as you can see in this chart, was up a whopping 370%. This is a chart you will never see on CNBC because it doesn't help the narrative. Gold, bad. Fiat currency, good. Now you can also see here that Bernanke, while testifying in front of Ron Paul, said gold is not money. Now, we had Alan Greenspan, Dr. Alan Greenspan, that came out last year that said gold is a currency, probably one of the best currencies in the world, better than any fiat, including the US dollar. So now this is telling you something, and it should tell everybody who's watching this program, you need to own gold, and you need to own silver, and you need to own physical gold and physical silver. And you want to hold it somewhere that the government can't take it away, like in 1933.
Yeah, well, look, I mean, as far as gold, you have to understand that we're talking about gold priced in dollars, and even priced in dollars, it's outperformed the NASDAQ. But if you look at gold priced in things like yen, euro, or
Canadian
Russian ruble, you know, in the last year or so, it's doubled against the Russian ruble. So what we say in this show is gold is real money, and people in Russia who bought gold a year ago, even though the currency, the fiat money, ruble has been down, their purchasing power has remained absolutely constant. They haven't seen a loss of anything because gold functioned as it always has throughout history as real money. So these other currencies, particularly the euro, recently because of all the chaos in Greece, etc., gold's been moving up against the euro. It's been almost at a new all-time high against the yen, which is phenomenal. And of course, the dollar they'll see that all new time high against the dollar at some point, but by then, I wouldn't be surprised if the availability for gold for purchase by the average retail schmo is exactly zero, because there won't be any gold available at any price, because there's not that much of it around. Your thoughts?
Well, gold is very important. It's got a track record of 6,000 years of being a currency. So I don't care what anybody tells you, you need to have gold in your portfolio. I mean, it is a safe haven. And I wrote in Planet Ponzi, my Russian version, and in my Chinese version 2 years ago or 3 years ago, that one of these countries, either China, Russia, or the BRIC nations, are going to come up with a currency that's based in gold. I still hold that view that somebody's going to go back on a gold standard. And now if China were to do it, think about what's happened in China now. From 2000 to 2015, Max, they've spent $28 trillion that they've printed, okay? From 2000 to 2008, they spent $7 trillion. So this is marginal utility, marginal returns. And then from 2008 to 15, they ratcheted up another 21. So they got less returns. Now this money has to all be repaid. Now when China blows up, which I think we're going to see very soon, right? They're going to take their 1.3 trillion in US bonds, and then you'll have your bond apocalypse, because they're going to start selling bonds, and then the interest rates will skyrocket, which will cause a default.
Right. Here's a question that Stacy wanted to ask. It's a very interesting kind of thought piece here. So if 1% of the population owns 50% of global wealth, and money velocity comes to a standstill, it doesn't effectively, it's like in the game of Monopoly, it would be game over. I mean, it just suddenly, there's a point at which, like Monopoly, when at the end, the one person has all the money, all the wealth, all the housing, and the game is over. So if this 1% class continues to aggregate all of the wealth, isn't it similar to the game of Monopoly? You just simply have to call the game, it's over.
It's over. But we have the chart on the velocity of money that we should have a quick look at, which says liquidity is not a solution for insolvency. And basically what's happening is you can keep printing and printing and printing. And this is what the Bank of England has done, the US Fed, the Bank of Japan, the ECB now wants to get in on it. The Keynesian philosophy is just print more money. Now, if this really worked, you would see a pickup in the global economy. You haven't seen the pickup that they claim that you'd get. So they're spending like $5 to get $1 in GDP, and it's a fake GDP. So the velocity of money collapses. It is a sure indicator that what they're doing doesn't work. So when it doesn't work, you should have a plan B. The plan B is no plan B. It's print more. Don't be sore, print some more.
Yeah. Okay, so let's drill down to a specific company here in the UK. Let's talk about a company well known here in the UK, Tesco. They had a horrible year of accounting fraud, so they're going to shut down shops, and they're going to expand into mortgages.
Nice.
So this seems like a perfect setup for a Planet Ponzi answer. Your thoughts, Mitch Firestein?
Well, you know, first of all, the mortgage market is totally out of control everywhere. But in the United States, the Fed owns all the mortgages. I mean, I think that Mark Carney, who went from Bank of Canada to Bank of England, and he's running the risk board in Switzerland for all derivative product risk. So he's got many hats on.
Who?
Mark Carney.
Yeah, okay. Mm-hmm.
So the problem with this is I don't know if the UK government is going to come out and start buying all the mortgages, because their GDP, as you know, is only 2.6 trillion, which is about half the size of a company like BlackRock, which has 4.3 trillion in assets under management.
Yeah, so like the Fed, the Bank of England will ultimately have to come in and buy those mortgages.
From Tesco. Yeah.
From Tesco for dodgy properties.
So will they say, aisle 7, we're having a mortgage special, next to your eggs and next to your butter?
Every little bit helps.
I guess.
Every little mortgage helps.
There you go.
Tesco, you know, you got
show a little love. You got to get a little love.
All right, so the UK general elections of 2015 are heating up, and so is the propaganda. Let's tell us about the Americans running the party campaigns. We touched upon this earlier, and I was quite shocked by it. We've got about a minute left. So it seems like discredited or bankrupt or sleazy or dodgy corporations, whether it's the folks trying to take over the New Era estate over in East London, you know, they were thrown out of America and they came here. Now you've got some old spin doctors from a couple of elections ago, can't get any jobs in America anymore, so they hire them over here.
Well, no, it's funny because it's Jim Messina and David Axelrod you're talking about, and the Tories and the Labour had hired both of them to come over, one against the other. So both of them worked on Obama's campaign, and now they're heads up against each other. They're generating fees. So instead of going into banking, people should come out and do that, because propaganda is the new art form. It's the new black, I think.
Well, propaganda has replaced price discovery.
Yeah, but you know, if you look at,
I mean, that's a profound statement. Right. I just don't want it to go unrecognized by Mitch Firestein as being one of the most profound statements I've ever made on this show in the last 10 seconds that we have.
I absolutely agree with you. But look at can you trust the media? You've got, you know.
Only this show. I only trust this show. This is the best show. We deal in the truth. Unlike those other networks that peddle fraud. Absolutely.
Brian Williams, is he coming on soon?
Yeah, of course. He's got a new show on RT called The Big Lie. All right, so Mitch Firestein, thanks so much for being on the Keiser Report.
Thanks for having me.
That's it for this edition of the Keiser Report with me, Max Keiser, and Stacey Herbert. I'd like to thank our guest, Mitch Firestein of PlanetPonzi.com. If you'd like to get in touch, tweet us at Keiser Report. Until next time.